Hi, I'm Christine Ailiff from Charles Cameron Associates, and I'm joined today by one of our highly experienced advisors, Tom Cleary. This is the third video in our series looking at frequently asked questions from first-time buyers, and today we're going to be looking at questions regarding credit score. A recent credit score check showed that my rating had dropped because I've applied for a credit card. Do I just need to wait for time to pass for this to come off of my credit score?
Your credit score is similar to your brain cells. It repairs itself every single month. So every time you make a payment, whether it's a credit card payment, a personal loan or a mortgage payment, your credit score will improve and will increase. So from one credit search, I would expect it to be back to where it should be after a month or maybe 6 weeks, something like that. So I don't think you would need to worry too much about one credit score, but certainly after a month, I'd expect your score to be back where it was.
If I'm applying for a joint mortgage, how does credit scoring work? Is it 50-50?
I don't believe so, no, but lenders are understandably coy about their credit scoring techniques and their algorithms. Generally speaking, a good score on either side is required. Obviously, the higher the better, but I don't believe that if someone had a 999 score and the partner had a 499 score, it would average out at 750. It just doesn't work that way, unfortunately. But I have to say, a mortgage is a secured loan. It's secured on the property. So if you don't pay the mortgage, the owner, of course, the lender own your property. So in credit scoring terms, a mortgage is the easiest thing to get. It's easier than a credit card or a personal loan because they are all unsecured lending.
Can I start self-reporting my rent at any time? For example, if I'm not looking to buy until the autumn next year, can I start to report now?
Yes, you can. Experian offer that as a service, so you should just refer to Experian. But yes, you can start self-reporting because your landlord, I think, has to have under 500 properties under management for them to do it for you. So self-reporting is the way to do it.
I've rented for the past few years and have had to move around a bit because of it. My last credit score showed this damaged my score. Is there anything I can do to correct or minimise this damage?
Absolutely, yes. Again, speak to Experian. They are extremely helpful and very proactive at telling you how to improve your score. You can have goodwill sitting at a previous address, and perhaps if you haven't created the address associations with Experian that are pulling that goodwill through, your score can be impacted by that. So Experian are very good at telling you what to do, how to log into your account, and overnight you can improve your credit score just by speaking with Experian.
My credit card is not linked to my current address. It's still linked to my parents' home. What does that mean for my credit score?
Again, potentially you could be missing out on some credit goodwill because you're making those credit card payments every month, but it's sitting at a previous address. So long as your parents' address is within the last 3 years, when you apply for a mortgage, you'll quote your parents' address as a previous address, and you should get the uptick of that goodwill sitting there. It may be that it's all your address associations have been carried through, and like I said, if you speak to Experian, you can make sure that's happening. But in reality, if you've got a credit card, it should be in your name at your current address.
Does obtaining an AIP or decision in principle multiple times affect my credit rating? For instance, if we go now to get approval on a mortgage, but we don't find a house we like, and we decide to wait for a year, will this affect our credit scores?
Most lenders now offer a soft footprint in terms of the initial agreement in principle, so they shouldn't really have an impact, but that's not true of every lender. So what you don't want to do is go around having multiple agreement in principles carried out, which is going to have a detrimental impact on your credit score. Having said that, if you're not looking to buy a property for a year, there really is no point in doing an agreement in principle now. Because they're only valid for 30 days, 60 days or 90 days, depending on the lender. So they'll be out of date by the time you come to find a property anyway.
Thank you for taking the time to watch this video. We do hope that you found it useful. Please do keep checking our Knowledge Hub for lots more interesting videos and articles on the mortgage market.